Bang! Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at how to properly utilize the aging table based on the allowance method to estimate uncollectibles. So if you're unfamiliar to the allowance method, don't fret gang. I drop a link to get you up to speed in no time. So with that being said, let's get it. So it tells us that Surf and Sun had the following balances as of December 31st, 2024. Before the year-end adjustments. So let's see what happened before the year-end adjustments. All right, so we have some accounts receivable and allowance for bad debt accounts. Okay. And then we have some estimates. All right. And then they want us to journalize Surf and Sun's entry to record bad debt expense for 2024 using the aging of receivables method and prepare a T account to compute the ending balance for allowance for bad debt. All right, gang. So here's the deal. We're dealing with accounts receivable, and we know that accounts receivable has a disadvantage of not being able to collect the money from customers sometimes. We consider that to be called uncollectibles. Now, there are two ways to account for uncollectibles: the direct write-off method and the allowance method. We are focusing on the allowance method with this particular problem, which means that companies estimate up front a percentage of the accounts receivable that's deemed uncollectible. When a company estimates, they're basically creating a bad debt expense for the period as well as an allowance for bad debt. That allowance for bad debt happens to be a contra account to accounts receivable, which makes it follow accounts receivable on the balance sheet in order to create the net realizable value. Our net realizable value formula is simply the gross amount of accounts receivable minus the allowance for bad debt. And it basically means the amount that the company expects to collect, realistically speaking, on their receivables. Now, in terms of estimating, there are two ways to estimate gain: the percentage of sales and the percentage of receivables. This problem deals with an aging table, which happens to be a subset of the percentage of receivables, which means we have to follow those particular rules. And under the percentage of receivables, we take an estimated portion based upon previous experience and multiply it times our account receivable balance. Whatever that amount is, gang, must always become your allowance for bad debt ending balance for the period. Now, in terms of an aging table, it's just a fancier, more descriptive way of that particular version. So what am I saying, gang? If we take a look at this particular table that's given to us, this is a beautiful example of an aging table. The aging table basically takes the total amount of the accounts receivable and itemizes it based upon the amount of time that has passed that hasn't been collected. So if you look at this particular table, we can see that we have an amount of $78,000 that represents uncollectability from 0 to 60 days. And then if we look further to the right of that, we can see that we have an accounts receivable balance of $3,000 that represents uncollectability for over 60 days. And if you pay close attention to the estimated percent of uncollectability, obviously, gang, you know the further out that you're not collected from the customers, the higher the probability of uncollectability.
Pay me my money.
Well, I'm sure my people will be
In cash.
And that's why we can see the big jump from 0 to 60 days of 2% to 23% over 60 days. So what we do with this table is simply multiply the estimated percent of uncollectible times the respective accounts receivable amount to get the amount of uncollectability. Once we summarize the total amount off of the table, that will be our allowance for bad debt account balance that we must make the appropriate adjusted entry in order for it to be represented on the balance sheet. So it says to journalize Surf and Sun's entry to record bad debt expense for the period using the aging receivables method. So we're going to go back to that particular table and we're going to do the calculation, gang. If we multiply 2% times 78,000, that will give us, for the period of 0 to 60 days of uncollectability, a total amount of $1,560 that represents the total amount of uncollectability for the period. Then we're going to take the 23% and multiply that times 3,000 will give us a total amount of $690. When we add those two together, gang, that will give us an amount of $2,250, which represents the new ending balance for our allowance for bad debt. And so if we look at our unadjusted balances for the period, we see that our allowance for bad debt already has a pre-existing balance of $2,063. But gang, based on our new calculation of the aging table, we know that that balance should be $2,250. So, in order for that account to be fully adjusted, we have to make an adjusted entry for the difference between the two, gang. And so we know if we subtract $2,250 minus $2,063, that's going to give us an amount of $187. Therefore, this proper estimate is going to require us to debit bad debt expense and credit allowance for bad debt for the $187, gang. We're going to check the answer. Good job. Requirement 2 wants us to properly post the transactions to adjust the appropriate ending balance for allowance for bad debt. So we know that our beginning balance was $2,063, and we know that we properly adjusted the allowance for bad debt via the bad debt expense estimate of $187, which will obviously give us a total new ending balance based on our aging table of the $2,250. We're going to check the answer. Nice work, gang. So there you have it, gang. A quick and easy illustration how to properly utilize the aging table under the allowance method. So if that light bulb is clicking, then that means you are further closer to chasing the bag with this accounting information. So do me a favor, like, subscribe, and share the channel with your friends so they can chase the bag as well. As always, gang, I'm Dr. Who, and it's my humble time to have you guys share your time with me, and I'll see you soon. Bags!